Welcome back to QAV Australia, Tony.
Well, behind the scenes, Cam just went from a concerned look to a big beaming smile in the blink of an eye.
Technology, Tony. I don't want to put my foot through my computer at all. It is episode 906, Tony. This is the 10th of February, 2026.
Already.
How's your week been?
Good. Yeah.
What's
Played a lot
news?
of golf. Played a lot of golf. Been up and down to Melbourne. Unfortunately, Jenny's father's in hospital, so we're going up to see him, which is no good. Talk about a few things in after hours that we've been watching, which have been good. But yeah,
How's your hot water?
fixed.
Yeah, still? It's holding out.
Yeah,
It was fixed
no,
last week, but it's still good.
still good. The new system's fine. So they put a new hot water system in, and it's got a loud fan on it. So if you turn the hot water on, you can hear this sort of vibrating outside, which wasn't there with the old one. And they fixed it because the gas fitter came back and changed the regulator between the gas bottles and the house, and which made me sort of think that might have been the problem in the first place, and we've spent $3,000 on a hot water system we don't need, and which is louder than the old one. So, but anyway,
And what about the
short
beeping?
of throwing out and get another one.
You were telling me last week that there was beeping going on in the middle of the night, or the week before that.
Oh, that was the boiler for the heater. That's been serviced and fixed, and parts have been replaced. So yeah, major handyman work here over the last month.
Well, something else that wasn't working last week was the stock market, Tony.
Worked perfectly. What are you talking about?
Well,
Bitcoin's down to its lowest. All the tech bros are licking their wounds. I think it's great.
I don't know if that's true. I think that they've all rebounded in the last day or so. There was a market correction on the ASX. I ran a buy list on Friday night, and there were 3 companies on it. Well, that's not true. There were 5 companies on it. 2 of them were commodity stocks, where the commodity was a Josephine. Of the 3 that were left, one was Atlas Pearls, which is just a no-go in my book, but I know you're doing your pulled pork on them today, so that should be fun.
Well, there's only 3 stocks to pick from on the buy list.
And the other 2 were, okay, one was Qantas, but they hadn't reported. So it was like nothing to buy. So then I ran another one Monday night, last night, and there was about 10 stocks, but again, none of them had reported, so nothing to do. But that 3 companies on it last week, or 5 if I take the 2 with Josephine's. And when I did the commodity checks, everything except manganese was a Josephine or a sell. It was crazy. I have never, in the years we've been doing this, seen a buy list with 3 stocks on it. Even in the middle of COVID, we had more things, I think, to buy. Well, we didn't buy anything, so maybe not. Maybe they were all Josephines. Yeah. But it was shocking. I was shocked. But then the market bounced back yesterday. A lot of things are still Josephines, though, in the buy list I did last night. A lot of things had recovered yesterday, but not well enough to get back over a second buy line. So for a minute I thought, ooh, something's gone wrong with my script. And I started manually checking the sentiment on 10 or 15 stocks on the Bretelator and saw, no, they're all Josephines. So, yeah, you came up with a similar sort of result, I assume, over the weekend?
I did. Actually did mine again on yesterday as well, but my buy list has all the Josephines in it still, so it's a bit longer than yours. But yeah, when I dug into it, there wasn't much
Don't have to
to
brag,
buy.
Tony, that yours is a bit longer than mine. That's not nice. No bragging. It's what you do with the buy list that counts, Tony, not how long it is. Don't you know that? Oh, there's an episode title. It's what you do with it.
Yeah, well, I like keeping the Josephines in because they can turn around quickly. Something that wasn't a buy yesterday can be a buy today. So
Yeah.
I keep it all in.
Fair enough. Well, I'll do some quick updates. I did the light update on Monday, and it's worth noting the most impressive return for the previous 30 days, and I did this before the market had opened yesterday, was Corvest, KOV, which was up 14% for the month. We've owned Covest in the light portfolio since November 2023 when we bought it at $7.99. As of Monday morning, it was $16, which is over 100% return in that period. But we've owned it in the dummy portfolio since April 2020. Must have been the first thing that we bought in COVID, right? April 2020.
Yeah, it would have been, yeah.
We bought it at $3.49 in April 2020. So it's up 358% in nearly 6 years. Which, what's that? Annual sort of return, like 6 divided by 360?
Yeah.
60 a year on average? Is that right? Six
I don't
sixes
know.
are 36? Yeah.
Straight
But
line, yeah, not KO.
But it's another example of why we don't rebalance and we don't take profits. I had a phone call from a member yesterday saying, hey, my stocks are doing really well, but when I look at the 3-point trend line, the sell line for them, it's way, way, way lower than where the share prices are. Should I take profits? Should I sell some? I'm worried that I'm going to lose everything. And I gave him the usual spiel, which is, this is not financial advice, but if it were me, what Tony always says is, do whatever you have to do to sleep well at night. If that's what you want to do it. But we don't do that because, and talked about some examples. Things go down, they go back up. We've talked about a few on the show recently.
Yeah, and look, Corvest is a great example, isn't it? We've held it almost the whole way through since the start. I think we did this podcast not much earlier than COVID, so it's a 6-year holding, and it could go on for to be a lifetime holding, which is perfect, isn't it?
I guess, yeah. I mean, is 360% in 6 years good?
Yeah,
it's good.
Doubling it.
I don't know.
My rule of thumb is doubling in 5. And
Oh,
you want
really?
you want to do better than that. I think 15% is doubling in 5. So anything greater than that's good.
Right.
So this is 3 times in 6. So it's probably
good.
better than doubling in 5. Yeah, it's good.
Probably better than that. I did have some recent sells though. Reckon, GRR and NWS. Reckon
Tech stock.
Yeah, counting software stock, and I think they've been falling for a while, but there was some news last week before, Anthropic, the AI company that has one of the state-of-the-art models, Claude, released a new sort of feature of Claude Co-work, and it was a legal plugin basically that would do a lot of legal work, and legal software companies in the US took a massive hit. I was actually looking at some of them over the weekend, publicly listed legal, there's a bunch of them over there, and they're all in the last year or so down like 70-80%, taking a massive hit. They all took another hit, a bigger hit last week when Claude came out with this. And I think generally across the board, software, there's lots of talks about Atlassian was down. People that aren't necessarily in the legal space took a hit because I think the Fin said the AI penny is finally dropping for software manufacturers. The market is finally working out that, AI could come for these software vendors a lot sooner than we may have thought. It's not 5 years away. It's maybe a year, 2 years away where they'll come for you. I think I told you this about Taylor. Taylor built a task management app for his business. For he needed something sort of customized for campaign management and task management for all of his creators. And he just built something, and it looks like a professional Mac app. It's installable on a Mac, and he's just about to do an iPhone version. Just built it all in Claude Code. Just said, build me this app, custom built, looks professional. It's taken him a bit of time he's put in over a couple of weeks, but he built his own app that would have cost him, hundreds or thousands of dollars if he wanted to buy it or rent it or lease it or whatever, pay for licenses for all of his team.
Now if you go and see Blackbird Ventures, get a Series A funding round going for the app, and then listed on the ASX, and then watch it disappear after Claude comes along. But Reckon was a good example of what's happened because it's kind of like it's always been a bit of the poor relative of the other accounting stocks. The two big ones in Australia are MYOB and Xero. Xero in particular is one I want to talk about. Have a look at their share price. It's now back to COVID levels, speaking of COVID. Well, actually, no, it's not
XRO?
true. Yeah, back to
XRO.
2023, its last low.
Whoa. Yeah, look at
It's
that.
kind of like halved.
Yeah.
And it
It
was
was
only, I can't remember how long ago it was now, a couple of years ago, that people were telling me, you got to invest in Xero. It's the biggest thing. It's a software as a service. It's capital light. It's not making any money, but it's growing fast. And there was some analysis that had come out by a big research house that had said Xero was going to be able to, once it dominated the space around the world, start monetizing it and trading at a profit. And now look at it, it's half the price it was.
the crazy thing is, if you go back over the last few years, it was sort of bottomed out in December 2022 at $70, which is when ChatGPT came out. And then it just grew like a rocket from there to June of last year when it hit $193. So, it grew because of AI. I think the last couple of years people have been going, oh, all these software companies, because they all say, oh yeah, now we're going to put AI in our tool and it's going to be great. It's going to
Yeah.
make it better,
I'm not
as
sure if that's the
opposed to
reason why
AI's.
Xero grew.
Oh, okay. Why did it grow?
Yeah. Oh, it expanded into the US mainly. It's always had a big following because it's been a growth stock, one of those unprofitable growth stocks, putting all its money back into, all its revenues back into improving its software platform and growth.
Right.
Expanded to the US, changed CEOs. Daniel Petrie was involved for a while. He might still be,
Good
but
old
now then he
Daniel
handed over
Petrie.
to somebody else. Yeah, someone I
Oh,
forgot
boss
the
of
name.
mine.
Someone Singh, and then and she was liked by the market, and like I said, this research was going around saying Xero's going to take over the world, and once it does, it'll be like Uber and can start putting its prices up, and margins will come back, and it'll make money. But I mean, it just hasn't happened. I
Yeah.
use Xero. It's a great package. I use Xero. I use ShareSite.
Yeah.
Fantastic packages. But if they needed to make money, they probably cost me twice as much than they are.
Yeah. Well, it's down to 83, $84 at the moment from 193 June last year. So, as you said, back down to where it was beginning of 2023. So that bit of a blubber. GRR, we know we've talked on and off about the issues that they've got, mine closing, etc., etc. That finally became a sell. And News Corp. And I've got to be honest, I'm always kind of happy to sell News Corp. I always feel bad when I have to buy it.
Yeah, I agree, but just be aware. Remember, we've had this problem before, and I haven't looked at News Corp this half, but it did pop up on my buy list too. And straight away I went, Stock Doctor still haven't fixed that problem with the number of shares. So
Oh,
remember,
really?
yeah. In fact, I even bought it a couple of years ago when it popped up on the buy list and had to sell it. So there's been a problem. Whatever data feed Stock Doctor have used has reported the wrong number of shares, and then a week or so later
Yeah.
they work it out and fix it. Yeah.
God. So, yeah, fully paid ordinary shares 566 million June 2025, and it's just dropped down to 42.8 million
Hasn't dropped.
in December 25. So, the numbers are wrong on that again. Do we have to tell them again that it's wrong?
Yeah, well, I haven't looked into it, but possibly, yeah. It's happened the last 2 years running at least.
Well, I sold it.
Yeah.
But it was a
Good.
3 point trendline sell. I mean, so, you know, it's got nothing to do with the share price, the number of ordinary shares, right?
No, but it gets onto our buy list because there's an incorrect calculation.
Oh, in the first place.
Yeah.
See what
Okay,
you're
so
saying.
I think it might inflate the prop cap or something like that because of the wrong number of shares.
It's no longer a 3 point trendline sell either. It's recovered since it was yesterday. Just trying to figure out when I bought it. I
But
bought it.
listeners should be aware. They should really double check the number of shares before they buy it. Check it with the annual report.
I bought it in April last year. So Yeah. Anyway, ended up. No, it was a Rule 1 sell for me. It wasn't a 3-point trendline sell this time. It was a Rule 1 sell. Down 23% from where I bought it. Just goes to show. Can't trust News Corp.
Well, I'm not sure where it's at, but they have a big holding in REA, or realestate.com.au, which was sold off last week as well, as part of the AI sell, AI caused sell down. Yeah.
It did go up as high as 54 at one point, but now it's come back. Anyway, so what else? RBA, Tony, last week on the show, you predicted that they would hold their rates. And like any good economist, yeah,
Yep.
you were wrong.
Well, you're not supposed to do that, Ken. You're supposed to wait until I'm right before you highlight it.
Ah, right.
Yeah,
Yeah,
we always assume I'm wrong.
So time to update your spreadsheets, kids, if you haven't already.
Yeah. Yep. So we need to update it for our IV calculations, and eventually the mortgage rate will change as well. It'll go up. Probably won't flow through straight away. It'll take a month to come through.
AIS, Eris Resources, I think, issued their quarterly activities report last week, maybe a week before. They were down 10% as a result of that.
Had a look this morning and they were up 7. So
Oh, good for them.
a lot of volatility in the market, Cam.
Yeah, they took a hit last week. I think I do hold them in something. Yeah. No, they were a possible buy for QAV Light back in December of last year. They're down about 4% since then. Something's going on there. I think Toby or somebody posted in our Facebook group that there was something messy going on, but I didn't get details. One of the big wins for us, though, this week has been Pepper Money. Good old Pepper Pig. It was at the top of our buy list for God knows how long. A year, I think, more or less. And I bought it. I was in the dummy portfolio since May, and also in a light portfolio since May of last year. We bought it at $1.64, $1.65. Didn't really do much until this week, when it was announced that Challenger are trying to acquire them. And I think it jumped up like 24% Monday in trading.
Yeah, so technically I think Challenger and KKR, or a subsidiary of KKR, are acquiring them. So KKR originally acquired Pepper, floated it, and now are engineering a buyback where Challenger will have 25% and the other KKR subsidiary will have the rest, but it'll be unlisted. From memory, the offer was at $2.60, and it's got all the usual caveats, and the shares are trading below that at the moment. And I suspect that's because when Challenger announced they were bidding, their share price dropped. And so there might be some backlash from Challenger shareholders around whether they should be acquiring a company like Pepper. To put some context around that, Challenger have a long history of offering annuities to retirees. So people who want a steady income when they retire will buy a product off Challenger. And their business model is basically to find income streams that have low volatility and then put a margin on them and then package them up as annuities to retirees. They've done that for a long time with commercial property. And then as they got bigger and started to diversify away, I think even may have had some index-like ETFs or some products like that where they use stocks to back them. And now their plan is to use the loans that Pepper are making to people as that sort of fixed income pool of money that they can then put a margin on and sell as annuities. But some of the shareholders are questioning this because it's a new line of business for them and probably haven't gotten their minds around what it means. But also too, I think Challenger may have talked about buybacks or returning some money to shareholders as well. So there may be some more to play out in this one for us.
All right. Well, I wanted to give a shout out to Trent for picking up the news and sharing that with us yesterday. I just got an alert to say that Myer has just become a 3-point sell. As usual. Again. Yep. I don't know why I keep going back to that well, Tony.
I know what you mean. I went out to Chadstone the other week and went to Myer and was yet again disappointed by my visit and just, walked through Chadstone thinking, how does Myer even exist with all these other specialist retailers, which are inside Myer and often outside Myer in their own stores? But then left Chadstone empty-handed and went, how does Chadstone even exist these days? Because you can buy stuff. Went home and bought something online. So it just beggars belief, really.
It does. Well, I don't know how many times I've had to buy and sell Myer over the years, but there you go. This will be another one. Speaking of things that aren't around anymore, I noticed that SWM, Seven West Media, did delist after the merger late last year. I'm not sure if we talked about that. I know that we had Buggerlugs on from Collins Street and they were fighting it, but it went through by the looks of it, and Seven West Media did delist, so that won't be on our buy list again. Southern Cross Media, who merged with it, may be, but I don't think they are at the moment. What else?
Well, given there's 5 stocks on the buy list, it's a good bet then.
Probably not, yeah. Bhagwan Marine were in my news yesterday. They put out an announcement saying that they're in the process of adding a company called Riverside Marine that they've acquired.
Bhagwan's a sell, by the way. So,
is it?
Yeah. I don't know if you still hold it in portfolios,
No,
but
I don't.
Yeah.
Don't know if I ever did, actually. I think I did at some point. BWN. No, can't see them in my archive. Oh, yeah, I did. There you go. I did. It was a 3-point trendline sell back in November at 52 cents. What are they today? Should I look? Or is that just going to break my heart?
No, they'll be lower.
Oh, they are. 44.5 cents. Yay. Good work, rules. Anyway, they might be back on now that they've bought this company, Riverside Marine. Apart from making fun of Bitcoin, which I get in trouble for on Facebook. People say I'm obsessed with Bitcoin. Did you watch that TikTok? Did you watch the TikTok that I had linked in my notes?
Yes, I did actually.
What did you think of that?
Escalated
analysis?
selling.
Yeah, cascading liquidation.
Cascading, thank you.
Is what the guy said. Basically, I think he's an economist. His stuff is pretty good. He simplifies a lot of these things. He was basically saying that a lot of the money that's gone into Bitcoin over the last couple of years was leveraged. And as the share price has been dropping, people are getting hit by margin calls, which means they need to sell, which drives the price lower. And it becomes this cascading liquidation event where margin calls kick in, people have to sell, and that drives the price down. And then a new round of margin calls get hit, et cetera, et cetera, et cetera. So the price, is back down. It's gone up a little bit in the last couple of days, but when I checked over the weekend, it was back down to November 2021 prices. So 4 and a bit years of value for Bitcoin investors, and if they didn't sell, wiped out. But it's a store of long-term value, and it's going to hit $1 million, Tony. So just keep that in mind.
Digital gold.
Saw a friend of mine on Facebook over the weekend saying, "I think it's time to buy more Bitcoin." It's like, of course it is.
Yeah. Standard response. Yeah.
Which means that you didn't sell, and you've seen the share price halve, and you're like, "Quick, everyone go in and pump it back up again."
No, and who knows? It may turn back up again. People may be awake to it now. That TikTok you sent me also mentioned, I think it's now called Strategy, but it was called MicroStrategy. Back when I met the CEO many years ago when they were providing analytical software, and they pivoted to buy Bitcoin, and I think they're reporting this week in the US, and that'll be another watershed moment for Bitcoin because they hold a large amount of Bitcoin on their balance sheet. I don't think they've been a seller so far, but they have leverage via placements they've continued to make to their shareholders, and when they raise more capital, they buy Bitcoin. And I think they've been doing it the way they've been doing it is to issue convertible notes, and So as those start to convert, the shareholders might pressure them to sell down their Bitcoin, which will be part of this cascading liquidation event.
Liquidation.
Grand sale, grand sale, grand sale.
Comprare.
Yeah, but I actually think one of the big issues with Bitcoin is when the Wall Street ETFs raised a lot of money and bought a lot of Bitcoin or derivative Bitcoin products or whatever. I thought that was the trigger moment. I thought, buy Bitcoin just before that happens because there'll be a huge amount of buying going on. This was when the US allowed for the first time banks and investment houses to buy Bitcoin on a wholesale basis and offer it to retail customers via their various products. But I always thought it was a sell after that because if everyone's crowded into the ETFs, that's a large chunk of Bitcoin tied up, and who's going to top that buying? And then people will get sick of waiting and they'll start selling in the ETFs. We'll be required to sell to redeem, and that's just going to be a problem.
Well, I thought that's what the guy was suggesting, that people leveraged to buy into those ETFs.
Right.
Or funds
Now they've got margin
leveraged or
calls.
something.
Yeah.
Yeah, I know. Phil sent me an email suggesting a couple of future pulled porks, MSV, Mitchell Services, which I feel you have
I
done.
did that March 2024. I looked it up.
You did. I just looked it up too. So check that out, Phil, unless you think it's due for another one. But that was episode 712, titled China Beats Expectations Again. My annual, oh, look, China's not falling over like everyone's predicted story. He's also suggested GVF, which he says is a listed investment company. You familiar with GVF?
I'm not, but it might be worth doing. It's Chris Cuff's, I think it's a global value fund, so I'll have a look at it, and if it's worth talking about, I can do it next week, because I am running out of things to do. Our buy list either has stocks that have been there for a long time, like Pepper Money, or it's got nothing. So, I'll have a look at GVF for next week.
As opposed to our American buy list, did you look into the company I'm doing today, Tusk?
No, just a brief look.
Oh my God. I was telling Chrissy, it's another one of these ones with a major bribery scandal involving this company. CEO went to jail, et cetera, et cetera. I was like, we don't get those stories in the Australian, I'm sure there are stories of corruption and bribery and scandals in Australia, although probably not because ASIC are too asleep at the wheel. But it seems to me like 50% of the companies that I do in the American pulled porks have some major scandal, bankruptcies or bribery or fraud or death by misadventure or something going on, dirty oil, dirty this, dirty that. And I've been wondering, why is that so prevalent in the companies that are at the top of the US buy list? Obviously, they're discounted.
Yeah, no one wants to
because
buy
they've
them.
got this tarnish. But the companies at the top of the Australian buy list, we don't come across those sorts of stories.
Good point.
Is it because our regulatory framework is better, or Australians just less corrupt, or is it the culture in Australia is different? I've been I thought you'd know, being a
I
senior
don't.
executive, married to senior executive. Why?
It's hard to believe the regulatory infrastructure in Australia is better.
I know, right? Yeah.
Yeah.
So
It could be.
it's just
US could be worse.
but so many of these pulled porks, I get into them for the American companies. I'm like, oh my God, what? That's crazy. And yet Australia's so boring, our pulled porks. They're just, they're running a business, they're mining stuff, they're running a bank, they're running a retailer, they've got a credit card. Where's the death? Where's the bloodshed? Where's the murder? Where's the Shakespearean epic tragedy in the Australian business landscape, Tony?
Well, there has been some over the years, the HIHs and the other collapses, Opus Prime, etc. Christopher Skase, yeah.
Bondi.
I saw in today's paper that Mr. Brealey is going to release his autobiography.
Ron
Brealey, yeah.
Isn't he dead? Didn't we talk about him a while back and we said he was dead?
Don't think so.
Oh,
Well,
really? Well,
someone posing as
obviously
Ron's
not.
going to release an autobiography.
Oh, yeah, no, he's still around, 88 years old. Wow.
And Rear Window was musing that it's going to be hard, because he's going to self-publish it. It's going to be hard to release it and self-publish it because his internet activities monitored because of his previous charges.
But was he on the Epstein? Is he in the Epstein files, Tony? That's the important thing. Probably
Dunno.
not. Nobody's in the Epstein files. I mean, just, side note. The Bill Gates Association with Epstein surprised me and shocked me, as did the affair stuff that came out about Bill a year or two ago. Having been a follower of Bill since the 80s, worked there for nearly 10 years, met him a couple of times. Like, in my mind, Bill was above all of that. Probably one of the smartest guys on the planet. Very, 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 very much a nerd, rich nerd, but a nerd nonetheless. He's interested in science and tech and maths and reading books and studying stuff. So when the affair stuff came out, it was shocking to me a little bit, and also how badly managed it was, by the sounds of it. It wasn't even, he wasn't even trying to not get caught. But the Epstein stuff, I can't join the dots with that. I just can't imagine him being involved. Like, okay, we know that Epstein was, liked to surround himself with rich people and powerful people and philanthropists and scientists and Noam Chomsky spent time with him, and that's shocking. And there's been a whole bunch of that. And I can imagine, okay, Gates is positioning it, like I was just talking to him about philanthropic stuff, et cetera, et cetera. But then I saw Melinda, his ex-wife, get interviewed last week. And, okay, so she's got her issues with him. But if she had come out in that interview, because they asked about it, and said, look, Bill and I have had our problems and, we're divorced and all of that kind of stuff. But I have to say, having, lived with him for 20 years and knowing him well, he couldn't have possibly been involved in any of the horrible, horrible stuff. It was all surface level philanthropic stuff. They've got kids, they've got grandkids. His reputation is here. And she didn't do that. She didn't double down, but she also didn't give him an out. She just said, this is a time of reckoning for society, and basically threw him under the bus. And I was like, holy hell. Like, if she's not at least backing him up and coming to his defense with that aspect of it, that's not a good look. It's a really bad look. Like, I've got ex-wives, but I'm sure if I was in the Epstein files, even my ex-wives, even the ones that haven't spoken to me in 30 years, would have to come out and go, listen, like, Cameron,
Really?
there's no way Cameron is involved
Really?
with it. Well, I would like to think so. Yeah.
Yeah, I can't tell. I saw the interview with Melinda as well. It didn't defend him.
Didn't lead to his defence, did she?
No, but she's divorced from him as well.
So what?
Well, he's had affairs and all the rest, so there's a bit of bitterness there.
Sure, but I mean, they have kids and grandkids, and his reputation now is like, I mean, it's already suffered, but this is a whole new level of bad reputation anyway. All right, enough of that. What else you got?
Well, speaking of takeovers, one of the companies that did a pulled pork on last year, so it would have been on the buy list last year, is Appian, which was a vet chain.
Yeah, I remember that.
Yeah. So they've been taken over as well by a company called Adamantium, a private equity group, which I always chuckle when I see it, because wasn't adamantium the thing that they injected into Hugh Jackman to turn his bone into steel, the Wolverine?
Yeah, adamantium in science fiction generally, it's not just in Wolverine, but in science fiction, adamantium is like, fictional, superpowered metal or something like that. Yeah, strongest metal known to humanity.
This company's called Adamantum Capital, and they've launched a bid at 87 cents, and the price when I did the pulled pork was 54 cents in August. So good luck to anyone who still holds Appium Health.
Not us. I don't hold them.
Okay.
Don't know if I ever did. AXH?
Let me have a look.
Never bought
Yes,
them.
AXH. Okay. Couple of articles, 3 articles in the AFR this week. The first one talks about the volatility of Australian reporting seasons getting worse, and it says that August was the most volatile ever recorded, and the second most volatile was February before that last year. So they're getting worse. There's a few things in the article which they try and point to talk about why that might be. Everything from quant funds flooding the market with buy and sell orders and for small parcels, through to AI checking the announcements as they're made and buying or selling quickly, and passive funds. And I think probably passive funds is the one to be the most wary of, because as something starts to move, they tend to, what's the word I'm looking for? Make that move bigger or smaller, magnify the move.
Yeah. You've been warning us about that for a long time.
I have, and it's the reason why I'm not prepared to buy now either during reporting season until we get the numbers.
Yeah, right.
So we can make our own mind up. Expect volatility in the portfolio this month. Nothing I'm holding is reported yet, so we'll see what happens. We've still got a couple of weeks to go, but it will be volatile going forward. So there was that article which was interesting. Pepper Money, I think we spoke about. Was one of the ones I had to talk about. And last thing on gold miners and tech companies was an article saying that some funds who had been riding the what they call it, SaaS, the capital light business model for investing. So I'm just trying to find the article. Here we go. A company called QVG, Capital's Opportunities Fund, is one of the many small cap funds that invest mainly in technology and industrial stocks, and has been grappling with the growing presence of gold miners on its benchmark. So this is from the AFR last week. The fund lagged the Small Ordinaries Index by 6.7% last month as its portfolio of companies from family tracking platform Life360 and buy now pay later operator Zipco to athletics and analysis developer Catapult Sports were punished by the shift of money into the booming gold sector. One of their founders says, in the last week of January, the queues outside Martin Place's gold bullion depository started to reach Castlereagh Street. We are jelly. No one is lining up for our stocks, QVG portfolio managers Tony Waters and Chris Prunty said. The rotation to resources have left the share prices of plenty of QVG-style businesses floundering. So we've been in gold stocks all the way through, which has been good for us, and it's catching some people napping. But the other part about this article, which was interesting, was that the ASX will rebalance their indexes on March the 6th, and there are some gold stocks which are set to move into the ASX 100. Some of those have been on our buy list. Westgold Resources, Regis Resources and Vault Minerals are joining the ASX 100, or likely to join the ASX 100 on March 6th. And then that will probably promote some passive investing buying of them, but will also, disrupt ASX 100 investors as they try and grapple with the idea of buying gold miners and whether it's late in the cycle or not. So interesting article about how people have been caught short by the gold mining boom, but not us.
Good for us.
So that was my 3 articles to go through. And the last thing I've got is a pulled pork, and as you said, Atlas Pearls. You don't like them, do you?
Well, they're just, speaking of volatile, too volatile. We've seen this before where they have these auctions and the auction can be a disaster. I've owned them before, and they'll have an auction and it's a disaster and I have to sell it because the share price collapses like by 30% or something. Like just pulling up my trading history with them. Dim dim.
So having said that, I'm just looking at their share price graph, and it is of course volatile, but 5 years ago the share price was 1 cent, and today it's 19 cents. So even though it's been volatile, it's been generally going up.
I bought them in December 23 at 13 cents, sold them April 24 at 11 cents, a rule one sell, and now they're 19 cents. So would have done okay if I'd held it for another couple of years and hadn't sold it. But okay, I will shut up and let you talk about them then. I'll stop bitching and moaning.
That's all right. You can bitch and moan all you like. It costs nothing. Well, we've spoken about them before, but I haven't done a pulled pork on them. And apologies to listeners for me doing another small ADT stock, and this is a small one, but there wasn't much choice this week on the buy list. They are Perth-based, and I spoke last week about my liking of WA companies, so that gets a tick. Although they're not really Perth operating, their operations are in Indonesia, so I'm not sure whether the Perth economy benefits them or not. They're best known for producing and selling South Sea pearls, and in particular the sought-after white and silver pearls from the Indonesian islands. They operate 8 farming locations throughout that Indonesian chain of islands. They employ 1,000 people, or more than 1,000 people, and they harvested last year between 500 and 600,000 pearls, and they've been doing that for a while now. So quite a prolific pearling company. As far as I know, and they claim they're the only listed pearling company in the world, they commenced farming back in 1993 with their first farm located in Kupang, East Nusa Tenggara, and they've then expanded into other areas, including off the coast of Bali. So when I talk about pearl farms, these are of course in the ocean, in the seas, to the north of Indonesia. And if you have a map of Indonesia in front of you, that kind of stretches along the archipelago from almost touching Papua New Guinea, the western side of Papua New Guinea, or West Papua, through to Malaysia and even further to the west of that. And all of these farms are spread out across those islands, and they're all on the northern end of those islands, in that sort of in the small seas. The Java Sea, I guess, is the biggest one, which links into the South China Sea, but stretched across the northern coast of the Indonesian islands. They have done a lot of work on what they call their structured breeding programs, and because of that, they're able to maintain a supply of healthy, managed oyster stocks, and they can transport those between different farm sites, which is important because oysters are incredibly sensitive to what's going on in their environment, to small changes in temperature, but also changes in nutrients or pollutants in the water. So the fact that they can move oysters between the farms is good for them, because hurricanes and cyclones blow through and flooding happens, which puts more nutrients in the water. So the fact that they have 8 sites, even though they're all in Indonesia, they are quite wide apart, and they can move from site to site. To your point about the selling of the pearls through the auctions, and there's been one recently in Kobe in Japan, there have been a couple actually in Kobe in Japan. Atlas Pearls have been aware of the volatility of that market, and they're doing a fair bit to try and diversify away from that and work with customers, both retail and wholesale, and online, and not place as much emphasis on those auctions going forward. The auctions will still play a big part in clearing their stock, because they've got 500,000 pearls to push each year. But they are doing more and more deals with jewellers and people who like buying pearls, sometimes for jewellery, sometimes for their own collections, behind the scenes. Unfortunately, that means that South Sea pearls is one thing we can't get a commodity graph for. It's not a big enough market, there's no futures trading for it, and it's often an opaque market. It really only gets visibility when they hold these public auctions for the sale of pearls, but a lot of the buying and selling goes on behind the scenes with traders as well. The other thing that I should mention is that they do have quite a strong ESG focus, and they do a lot of work in the local communities of the pearl farming areas, which are often very remote. And they also point out that this type of farming, it's called farming, it's not really on land, and it doesn't involve all the chemicals and fertilisers that land farming does use. So it's a very carbon light type operation as well. What else can I say about them? I wanted to compare them to some other pearling companies that people might have heard of. Probably the most high profile one in Australia is Paspali Pearls. And this will serve to, I guess, highlight some of the benefits of Atlas Pearls to its competitors. So there's been two main competitors in Australia over the years, Paspali and one called Carlus. And Paspali is probably the most high profile one because from time to time they run marketing around Paspali pearls, but they also have high-end retail outlets. One of them is in Martin Place in Sydney, right on the corner of one of the main streets there, George Street, I think. So people may have wandered past it and seen it. The difference between Paspali pearls and Atlas pearls is Paspali cultivates from the wild. So they collect their pearls from the wild oysters, and we're always talking about a group of oysters called the Pinctada maxima oysters, just to be clear. So there are many other producers of pearls, but the South Sea pearls that come from that one particular type of oyster. The Paspali pearl from that wildly collected oyster, which tends to happen off the coast of Broome in WA and maybe closer to Darwin in some places, but mainly Broome. Those pearls are prized for their exceptional nacre thickness, surface quality and lustre. So they tend to sell for sometimes tens of thousands of dollars, if not more, and they're at the ultra premium end of the market. Whereas Atlas pearls, even those, they still get good prices for South Sea pearls, have a large amount of volume, which keeps a cap on the price, and they have a operation which involves culturing and farming the pearls, so they control that rather than have to go and find them in the natural areas. And consequently, they're in the volume game, whereas Paspali are in the high-end price game. There is another couple of things to note between the Australian source pearls and the Indonesian pearls. One is obviously the cost infrastructure. So Australian wages are much higher than Indonesian wages, especially in remote areas. And the Australian government caps the number of oysters that can be opened or pearls that can be taken from the natural waters off Broome to a certain number each year. So it restricts, for ecological reasons, the supply of those pearls, whereas that kind of policy doesn't happen in Indonesia. And because Atlas pearls are farming their own oysters, they can expand as much as they like in terms of regulation anyway. But Atlas pearls does still face a number of obstacles in its industry, and I'm going to highlight that by talking about an article I read by Laura Moore on a site called jewelryworld.net.au, and it was about her trip to Atlas pearls in Indonesia. She says, the journey begins in Atlas's own hatchery, where microscopic oyster larvae, called spat, are nurtured in a specialised algae-based diet formulated in the lab. At 4 months old, the young oysters are transferred to the ocean, placed into holding nets suspended above little black buoys, the buoys kind, which can be seen from the shore. Atlas team works tirelessly, diving daily to clean and check each oyster, ensuring its health as it grows. It takes 2 years before the oysters are ready to be seeded, a delicate procedure where a small piece of mantle tissue from a donor oyster, along with the round nucleus, is inserted into the gonad. Kind of sat up straight when I read that. Yeah. The oyster then forms a pearl sac around the nucleus, slowly coating it in layers of nacre over the next 2 years. By the time the pearls are ready to be harvested at around 4 years of age, only 50 to 60% will be considered jewellery grade. Watching this process unfold, from the cleaning of young oysters to seeing larger shells prepared for seeding, was a remarkable insight into the patience and skill required to produce pearls of this calibre. That article was from August last year. So it's a fairly labour-intensive and time-consuming business, and they don't see a result for 4 years, which is not unusual in farming terms, but it's not a sort of quick operation to go from starting to producing pearls. A bit of a history of the company. They've had a number of different name changes over the years. They publicly listed back in 1987. One of their original corporations was called Atlas Pacific Gold NL, and they started life to pursue mining opportunities, but in the early 1990s, they pivoted into pearling when it acquired interest in the Indonesian pearling farm in 1992. The company was renamed several times as the strategy shifted. It's been called in the past Atlas Pacific, Atlas South Sea Pearl, Atlas Pearls and Perfumes, and finally Atlas Pearls Limited in December 2017. So that's its timeline. It was interesting reading about the early people involved, none of which are still directors, but there are some large shareholders I'll talk about later. But it was basically founded by marine biologists. So the original project manager was a chap by the name of Dr. Peter Purchase, and he pioneered pearl farming in Kupang in West Timor. And he was a marine biologist. Are
you saying that Peter Purchase pioneered pearls?
Yes.
Can you say that 10 times fast?
I could not.
Okay, so keep going.
So he successfully managed oyster breeding and cultivation, which led to the early harvests in Indonesia. And he demonstrated that South Sea pearl farming could succeed overseas. He was replaced by a person called Joseph Taylor, and he later completed a PhD focused on the Pictada maxima pearl oysters and contributed a lot of technical knowledge to the operation. And then lastly, Professor Alex Kerr served as chairman of the board in the early development phase for the Indonesian operations. And the last person I should mention is an Indonesian goes by the name of Pak Poa. I think his full name is Admiral Raden Panji Poanomo, and he was an influential Indonesian partner and former naval officer who helped secure local government support and oyster stock access in East Indonesia. So a lot of work went on from a marine biology point of view to seed the industry before Atlas Pearls took a hold of it. But that's its history. Something else to say about them was traditionally Indonesian pearls were dismissed as inferior versus the Australian South Sea pearls. They were smaller, often not the white or gold colour that people preferred. But I dug up an article back in 1999 from, of all people, Tim Treadgold in the AFR. He's one of our mining go-tos when it comes to the Australian mining scene. But back in 1999, he wrote, Australia's pearl industry has been watching Indonesia very closely. Owners such as the Pass Baileys, who account for 40% of the annual $300 million in production, refuse to publicly acknowledge the threat. However, an employee of the Pass Bailey business came up close to explaining the position in a rare interview published in Australian Geographic magazine in 1994. This is the skipper of a Pass Bailey boat. He said, in Indonesia, for example, they operate under a totally different tax and wages regime. One of their farms can run for a year on the annual wages of one of our employees, and I have 26 people on this boat alone. But they lack the infrastructure and the technology to give us an edge. But I guess that sort of wage differential has been a big help for Atlas, and they've put a lot of money into infrastructure and technology since 1999, and so they're becoming more successful as time goes on. The other company to talk about in Australia was Calis, which were a couple of Greek immigrants in WA who got into the pearling industry, mainly to use mother of pearl to make buttons, and they were exited that business because plastic buttons sort of overtook their business. But their daughter was again a scientist and did a lot of work in the husbandry, seeding, and farming of oysters, and so they pivoted from the oyster business of making buttons from the shell to the pearling business. But they exited the pearling business in 2009, and it's probably worth looking at why they did that. So the 4 to 6 year life cycle from oyster seeding to harvest to sale was a long time to be invested for a family business anyway. They faced huge risks in terms of cyclones because they're operating in the northwest of Australia, Broome and closer to Darwin. But there are also other biological risks, including disease, temperature shifts in the water, and algae blooms. And then the high fixed costs of operating boats and divers and marine staff, of compliance, which doesn't exist in Indonesia, hurt them. And they were capped by regulation on how much they could take from the area. So they got out of the market, left it to Pasquale. But even Pasquale's latest returns, and they're a private company, seem to suggest that they were feeling the pinch in the pearl side of their business and were pivoting more towards tourism and hotels. So maybe Atlas are in the right part of the industry going forward, but I guess time will tell. Kayla's continued. They pivoted into jewellery making. You can go to their website now and see that a lot of the jewellery they make uses pearls, which they source from other places. And they've made a go of being a jewellery company. So as they put it, they're closer to the customer than what they were, and they don't have the 4 to 6 year lead times involved in pearling. And so they're doing better out of the jewellery side of the business. So that's a bit of an insight into the industry and into Atlas Pearls. The latest results, and I'm going back to June 2025, show that sales were up 6% and profit was down 30%, largely because they sold more pearls for a lower price, which is what you alluded to before, Cam. Their NTA was up, though, to 16 cents per share from 12.8 cents the year before, and dividends were increased to 2.4 cents from 1.85 cents, and they highlighted the fact that they were debt-free. So, except for the profit side of things, pretty good results. And even though profit was down, their NTA was up and they're debt-free, and they increased their dividends. So they were still, seeing upside in their business to convince themselves to increase dividends, and they had an increase in NTA. But again, I highlight the fact that there is no commodity we can track for this company for pearl pricing. And it's a bit of an opaque market, which is a risk for us. Looking at the QAV numbers, which again are based on June 2025, and they'll be updated fairly soon, I guess. If you're interested in the company, I would wait until then. Small ADT, as I said, $27,000 a day. Even though they're still a buy on the bread later, they're small ADT. Stock price is 18.5 cents for this analysis. IV1, 26 cents. So they're trading below IV1. We don't have an IV2 because there's no one covering this stock, so we have no consensus price target. And likewise, we have no consensus earnings per share forecast, so we can't give them a growth over PE score, a GROPE score. Yield is currently 10.8%, which is very high. Stock Doctor Financial Health and Trend is strong and steady, but Stockopedia only have it as 76 in their quality ranking system, and an F score of 5 out of 9. So Stockopedia, market down for quality. Stock Doctor tend to like it. One thing I'll highlight, which we don't score for, but some people like to know, is that it has an ROE of 34%. So very strong margins in this business. Stockopedia have a value rank of 97, but an overall rank of 78. So not high on their ranking system. PE ratio is only 3.7, so not the highest or the lowest, just almost the highest, but it scores a 0 for us. Prop cap is below 5 at 4.94 times, so that's good. Net equity per share is 16 cents, so book plus 30 is 21 cents and above the share price, so that gets a tick from us. Directors hold 14% of the company, and I can't find out much about these owners, but there are two big holdings between the Martin family and a company called Raintree Pearls and Perfumes. Neither appear to be founders, but they both have long-term shareholdings. And Tim Martin, who holds 14%, sits on the board. So I have scored it for owner founder, but it isn't really an owner, but they've been around for, sorry, a founder, but they've been around for a long time. There is consistently increasing equity, yields above the average mortgage rate. So overall, I'm getting a quality score of 13 out of 12, because some of these items get the score of 2 or 108%, and a QAV score of 0.22. So it's reasonably high on the buy list, even though it's a small ADT stock. A lot of risks with this company, but also opportunities. So biggest risk obviously is in the pearl price market itself. It's opaque. There's no commodity index to track, so it will get belted around by the auction events, even though this company has called out the fact they're trying to build a lot more diversification into how they sell their pearls. Even though they are spread across 8 sites, if a big hurricane went through Indonesia, I'm sure they would all still get battered. So natural disasters, biohazard and climate change are all going to be issues for oysters. They are very sensitive to even small changes in the water temperature, in small changes in the amount of nutrients in the water. I guess the upside is that they're also good for their local environments because they filter a lot of the bad things out of the water in those areas. But doesn't really help the business to do that, but it does keep it clean for future growth, I guess. The other thing I want to highlight is that this company often ends the year holding pearls in reserve. So if they can't get the price they want, they pull the pearls from auction and they put them in reserve, which is a good way to manage their price points. But if that stockpile gets too big, they're going to have to clear it at a significant discount at some stage in the future. And that's kind of the classic, retailing conundrum about maintaining margins versus clearing stock. So they've got to do well at managing that, and it's going to be a risk for them going forward. Positives, they're obviously a low-cost producer. The cost structures in Indonesia are much, much lower than in Australia, which seems to be its biggest competitor, at least for South Sea pearls. And I think, if anyone's interested in ESG investing, take a look at these people because they do seem to, I guess from their own accounts, put a lot back into the local communities. And as I said before, a lot of what they do is good for the local environment in terms of purifying the water, and they're not using any nutrients or chemicals, etc., which can be harmful to the environment. So a lot to like about Atlas Pearls, but it is risky and it is small. So have a look, especially when it releases its results.
What do you think about pearls, Tony? You a fan of pearls?
I'm agnostic. I know they cost me a lot of money because I buy them for Jenny. She loves them. So she's got some pearl necklaces and pearl earrings, which I bought for her over the years.
Does she wear them?
Yeah, she loves them.
Right.
And they're often, I don't know if they're South Sea pearls. She's got a couple of the white ones and the gold ones, but she often goes after freshwater pearls, which are cheaper and come in different colours, blues and greys and purples and things.
I bought Chrissy, I think, a pearl necklace for our wedding. I think she wore it when we got married. It was a wedding gift. I think she's worn it maybe once since then.
No, Jenny wears hers a lot.
I don't know. All right, well, Jenny probably dresses up and goes out more than we do. We're too poor to go out. Well, thank you, Tony.
Poor
there
to
you
go
go.
out. Listen, flew down to Sydney to go to the premiere, went to Annie. You didn't fly to Sydney? I thought you went
to go to the premiere of what?
Epic. I thought you went to Epic with
Gold Coast.
I was on the Gold
Hunter
Coast, sorry.
Drove down, yeah.
Oh,
yeah,
okay.
Flew down. No, I was the taxi driver. That's the only reason I got an invite to the premiere, is he needed someone to drive him down to the Gold Coast. That's my job. Well, thank you for that, Tony. You've changed my views on Atlas Pearls. I guess I'm not as dirty on them as I have been. I'll have to take the note out of my notes which says too volatile. I'll give them a pass now as a result of your good work. All right. After hours, Tony, and then we can go talk about America.
Yeah. Watched a couple of good things this week, Cam.
Yeah. Tell me about
Yeah.
it.
Knight of the Seven Kingdoms, which is a Game of Thrones prequel set a couple hundred years in
Not
the
another one.
past. Oh, this one's really good.
You said that about the last one.
Yeah,
And then
it
you
was good
said,
too.
no, it's no good.
Oh, okay. Well, so far this one's only had about 4 episodes, but Jenny and I are both really enjoying it. It's I think the book that's based on is called The Hedge Knight. So it's about a hedge knight, which is basically a knight who roams the land camping out, not really aligned to anyone, living in pastures and near streams and things. And this guy wants to enter a tournament to prove himself and to make himself a bit richer. And gets pulled into all the Westeros intrigues and the various houses, Targaryens, etc., that goes on, even back before Game of Thrones is set. But really, really good fun. Really
Is it
enjoying it.
as violent and sexy?
No, there's not as much of that in there. There's a lot of crude stuff, because it's the producers are at a pains to show it's a medieval time, so a lot of people going to the toilet in public, that kind of thing. But no, not as sexy at this stage anyway.
Right.
More wholesome.
What else?
Task, which is both of those are on HBO Max. Have you seen Task? Made by the producers of Mayor of what was it? Mayor of Easttown.
Oh, the Mayor of East. Yeah. The, what's her name? Yeah. I did see that. Yeah.
Yeah, which is really good. And this is made by the same producers in a similar sort of style. Mark Ruffalo's in this one though, rather
Oh, I've seen the trailer 400,000 times.
than okay,
Yeah.
really good,
HBO
worth
just
watching.
loves to show me the same trailer over
Right.
and over and over again. Yeah. Oh, that's good. Yeah. Okay.
Yeah, pretty gritty, and it's centred around the Dark Arts motorcycle group and their drug dealings and how they've drawn in a poor family in Philadelphia or on the outskirts of Philadelphia, and then Ruffalo plays the FBI task force commander who's tracks them all down. He's got his own problems. It's a slow burn, like it's an hour an episode, so you really get into the nitty gritty of each of the characters. And we liked it, and then but by episode 3, you have one of those holy shit moments, like one of those surprises, and you start to think, oh, there's no way out here. How are they going to get out of this? And that really hooks you into the rest of the series, which is good.
Mark Ruffalo turned into the Hulk. Is that what happened? That would have been a twist.
Well, he kind of did, because at one stage in the show, he's saying, "Oh, look, I'm almost 60 years of age and can't do this and can't do that." And in one of the last sequences, he's fighting a bikie gang leader and throwing him down on the floor and wrestling him, going, "Yeah,
Hey, my
it's not
my
consistent."
Sifu's nearly 60. He could do that. He could take on a bikie gang and he'd win. Well, it's good. I'll check those out, maybe.
Mm.
So, yes, I went to the Elvis doco with Baz Luhrmann and Richard Wilkins, who does not look good.
Oh,
Ooh, does not look good. It was weird. Like, it's been a while since I've been to anything like that. Gold Coast, lots of plasticky looking people in some interesting outfits. The
it's funny how it's changed, hasn't it? I went to, sorry to interrupt, I went to a gym in Mornington, had some work done on the car, and that's the closest dealership. And just the difference in the people, like my normal gym's in Rosebud, which is one of the poorest postcodes in Victoria. And then going up to Mornington, just the girls all had butt implants and thick lips, and just going, wow.
they look like this.
Yeah. Yep.
The film itself. Are you an Elvis fan?
Yeah.
Right.
Yeah.
So the setup, Baz did a Q&A afterwards that Richard Wilkins ran, and it was good. Like, Baz gives good Q&A. I'll give him that. Very, very chatty. The story is when he did the Elvis biopic a few years ago with Austin Butler, he heard a rumor from like an Elvis expert that there was this footage that was taken when he was behind the scenes footage of him preparing for his first Las Vegas shows in '69 that had never been seen. and it was buried in a vault somewhere. And they tracked it down in a vault in a salt mine in Kansas City. And it was like 68 reels of footage of Elvis getting ready behind the scenes. So that's predominantly what this is. It's an edit of that. But the problem was they didn't have sound for some of it. So they had to recreate what it would have sounded like. They have Elvis's vocals for bits and they use that, but they didn't have great backing sound for the band and the choir and that kind of stuff. So they had to get people in and re-record it and then edit it all together and stuff. But look, if you're an Elvis fan, as I am, it's always great to see Elvis sort of, I'll say in his prime, his second prime. Good shape. Just with his charm and his sense of humor, and he just comes across as a nice guy in all of this. The way he treats the band and the crew and the people in the hotel and the audience, and he's always got this thing where he's doing something ridiculously dramatic on stage, but then he's got a little smile on his face, like he's chuckling to himself at how stupid it all is. But but Baz in the Q&A made a good point. Did you see the 68 special documentary that came out a couple of years ago?
Yeah.
They made the point in that, which I thought was really interesting, in that when he came back from Korea and he did like one live thing and then Colonel wouldn't let him do live anymore, and he did all the crappy films and he made a lot of crappy albums, and he spent the 60s really struggling for relevance in rock and roll because the Beatles and the Stones and the Doors and everyone was doing their thing. A lot of people writing great songs, but he wasn't getting any of them because they were recording them themselves, or they were, going to Cher or Tina Turner or whatever. And so he got second-rate material, and then he wasn't sure he could perform live and it would be relevant. And he did the 68 special, and it was great. But then he was going to do the Vegas thing, and a lot of people, he said, Baz was saying, Rolling Stone turned up, magazine, and they were expecting it to be just, a bit like an oldies tour, like rolling out the old hits and a bit pretty lame. And of course, Elvis came out with this massive sound and massive band and the choir. And he took all of these like Simon and Garfunkel numbers like Bridge Over Troubled Water and made it this massive production. And Baz was saying, we look back at Elvis in Vegas in the 70s before he got grossly overweight, in the late 69 through to 74, 75. And we think of it as sort of iconic. But he said at the time, people thought it was going to be pathetic, and it came out and he just blew everyone away. So that's what we're seeing is Elvis preparing for that, not knowing if it was going to work, not knowing if, how it would be taken, and just working his ass off to really shock people that he could deliver. Having said all of that, is it worth going to the cinema to see? No, not really. I would have happily watched it at home. And is it the best thing on Elvis I've seen? No. The 68 documentary is much better, much more insightful, I think. Watching a full performance of him, Aloha Hawaii or anything like that, way better. So, yeah, it was okay. Then we went to the after party and Baz was there, and I wanted to go talk to Baz to tell him that I love The Get Down. Do you ever watch The Get Down? So It was a limited series that he did on Netflix 7, 8, 9 years ago. It was about the early days of hip-hop, like a fictionalized telling about a group of young guys in the Bronx or Brooklyn or somewhere. But then it has people playing Grandmaster Flash and, all of the early hip-hop guys. And it's sort of like a behind-the-scenes musical comedy thing about the early days of hip-hop, starting in little clubs and DJs, coming up with the drum beat and then talking over the top of the drum beat to keep people interested in dancing, and, how that turned into hip hop. It was really good. I don't think anyone's seen it. Chrissy and I loved it. Anyway, Hunter wouldn't come with me to go talk to him, so we let it go.
Oh, you needed Hunter?
Oh, I was like, come and talk to me with
Baz.
Baz.
Walk over and say hello. Go on, just go and talk to him yourself.
Yeah, I could. He was talking to people.
How did Baz look? Because I saw him on TV this morning as well. Yeah.
Yeah.
He looked, I don't know if it was work done, but he looked like he'd been through the makeup chair.
Oh, Yeah.
before he went on camera.
Think Neil Diamond, early 90s. Big hairpiece, plastic skin.
Mm-hmm.
Yeah, terrifying.
Mm.
The flip side of that is a film that Hunter recommended to me is Wim Wenders' new film, Perfect Days.
Oh, I love Wim
Me
Wenders.
too. This is story is there's a company in Tokyo called the Tokyo Toilet, and basically they got it's like 20 architects each to design a toilet complex, toilet block in Tokyo,
Right.
like avant-garde architecture that they run, like beautiful, amazing toilet blocks. And they wanted Wim Wenders to come over and do something, and it started off as going to be like a documentary. And he said, "No, I don't want to do a documentary." So he did it's a dramatic film about a guy, older Japanese guy, who lives a very simple aesthetic life, and he just cleans these toilet blocks. That's all he does. But he's like a perfectionist, and he treats it like it's a spiritual exercise.
That came out a while ago, didn't it? I remember reading a review of that last
I
year.
think it came out last year. Yeah, it just hit
Okay.
streaming. It's on
Right.
it's on SBS actually is where we're watching it.
Oh, okay. Okay.
Beautiful, absolutely beautiful. And if you like Wim Wenders, watch it. And the soundtrack is Lou Reed and Patti Smith and all these sorts of things. Great sort of 70s bass soundtrack. Beautiful film. And then I told you before we went to air that I finally watched the Ipcress File, read the book last year or whatever, watched the Michael Caine film. Fantastic. Michael Caine is so great in this film. And his attitude towards his superiors is so fantastic. Just smart ass. Hey, and when one of his guys says he's being transferred and he doesn't have my sense of humour, he goes, "I'll miss that, sir. I'll miss your sense of humour." But the final line, after he's been tortured and the whole thing, and he says to his boss, the major, "I could have been killed or driven mad." And his boss says, "That's what you're paid for." And that's it. It was such a great anti-Bond sort of line,
Yeah. Well, that was the whole thing about Harry Palmer, wasn't it? That he was meant to be the working class guy in all these British institutions, and Bond was the commander.
Yeah.
Who followed orders didn't follow orders as much, but stayed within the hierarchy.
And lived an amazingly luxurious lifestyle. This guy's, working out of, rundown buildings and tiny little
more so
offices.
horses than Bond.
Yes, exactly. Yeah. But I was reading up on it, and they were saying that, Caine, like it was one of his first big roles, and it was like the working class actor. He represented the British working class, who was, tough guy doing cool stuff, but had that accent and, that look, etc. He's wearing big glasses.
And people would say to him, "You'll never get far with that accent." And he said, "Well, surely someone wants to see a working class Londoner on the screen." He was right.
Which they said to Connery about his accent too, in the early 60s, and they both made it work with their accents.
I saw a great clip. See, I don't know what's going on, but I get lots of clips of Michael Caine interviews on my feeds at the moment because I love him. And there was a clip last night about Michael Caine saying how he met Sean Connery, because he'd known Sean Connery for a long time. They were mates. And he said, "Well, I went to this party, and you're supposed to bring a bottle and a bird, but I couldn't afford a bottle, so I bought 2 birds. And then Sean came in, and I was instantly his best friend."
Yeah. And it was Chrissy's birthday on Sunday, and I made her a carrot cake at her request. I make a cake once a year. It's for Chrissy's birthday. And I got to tell you, this was the greatest carrot cake that's ever been made in the history of mankind. It was absolutely...
We should get Chrissy on to
Oh, no, she would. It was epic.
She liked
Fox loved it. She loved it. I loved it. Epic! That's the name of the Elvis documentary. But the cake, too, was epic. So I'm thinking that's my new career. Going to be a carrot cake baker. Going to open up a bakery, just carrot cake.
Yeah, well, it's fairly niche.
Yeah.
It's fairly niche.
Yeah. Sourdough bread and carrot cake. going to be my thing when the AI takes
Keep
over.
the recipe secret. So yeah, I can't get
Well,
it.
I got the recipe from AI, so I said, give me
Oh,
a recipe for carrot cake. All right, that's all I've got.
okay.
Thanks to Kate.
Thanks.